Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Q&A. Good evening. Today is Thursday, August 28th. I'm Huang Fengrui. Today, we'll be discussing a few topics. Huida's financial report has been released, and overall, the results are steady. Concerns about AI investments or the potential for a bubble have temporarily eased for now. Right now, it actually looks like the market's uncertainty has been reduced. Before Huida's financial report was released, some people were worried that AI might really be a bubble, and that we might already be at the stage where the bubble is about to burst. But at the moment, we're not at that stage yet. It seems like the investment boom and demand will continue for a while longer. Looking ahead, before the next earnings season starts, the market will probably shift its focus back to economic data itself, as well as the pace of Fed rate cuts. In addition, some global or US-specific news or events could also cause significant fluctuations in the stock market. So let's first take a look at this week's schedule. Actually, for this week, we'll talk about Huida's earnings in a bit. Today, there aren't any particularly important economic data releases. The most important is the unemployment claims. On the 29th, there will be personal income and spending data, as well as the PCE, which are all quite significant. As for the 808 or the unemployment benefits, currently, the number of continuing claims is about 1.966 million, which is slightly lower than the previous value. The initial claims are also slightly lower than the previous value. So, we'll have to see whether this data actually meets expectations. At the moment, employment data is relatively important, because right now the job market seems relatively weak, and there's also a risk that this weakness could accelerate. As for inflation, although the numbers might be a bit high recently, people are still debating whether this is just a one-time phenomenon. If it is, then a slightly higher number for now, as long as it doesn't go above 3, is still within an acceptable range. Next, let's take a look at the 4 o'clock meeting. There will be some morning fog, and as for what's being discussed in the afternoon, it's actually not that important. You can just refer to past information for reference. Alright, next, let's look at the US dollar index. Right now, the dollar index is still fluctuating within a weak range, and there are no signs that it will drop further. As for US Treasury yields, they're still in a relatively weak and fluctuating state at the moment. The 3-year US Treasury yield is actually about the same. It's basically staying within this range. For the 2-year yield, there's a more obvious downward trend. You can see that the short end, the 2-year, continues to move down, but on the long end, there isn't that kind of clear downward pressure. It's just staying at a relatively stable level and making small fluctuations. Next, let's look at the S&P wink with thumb sticking out. Yesterday, it continued to move upward, and overall, the bullish structure hasn't changed. We'll take a look at the Huida earnings report in a bit. At the moment, overall, there really isn't anything particularly affecting the market. Right now, it's actually a relatively calm period. The Dow Jones is in about the same situation, and as for the Nasdaq, it also had a slight increase yesterday, and the non-mainstream indices also saw a small rise. Alright, let's start by looking at the Huida earnings report. In the most recent quarter, which is Q2 of 2023, Huida's revenue was higher than expected, with a year-over-year growth of 56%. It has also beaten expectations for 9 consecutive quarters, with year-over-year revenue growth exceeding 50% each time. The year-over-year revenue growth for this quarter is slowing, and this is for the middle of the quarter. What we can see is the construction boom has started to cool. Among segments, manufacturing center revenue $4.11 billion, with year-over-year growth of 56%, but this was below expectations. This marks 2 consecutive quarters of missing expectations. Why it falls short of expectations? It's mainly because GPU sales, specifically the H20, were dragged down by China, meaning it might not be sold to China. Even though the year-over-year growth is still 50%, the numbers were pulled down, so the overall manufacturing center business didn't meet the standard and fell short of expectations. On the other hand, the networking segment saw relatively high growth, with a year-over-year increase of 98%. So you can see that right now, Nvidia wants to start selling you everything, not just chips, but also networking products, system integration, servers, and so on. They mentioned that the networking segment has seen relatively high growth, which has benefited from the adoption of NVLink architecture, as well as InfiniBand and Ethernet. As for the gross margin, last quarter it was 72.4%. This is the gross margin according to accounting standards, and it was also higher than expected. Net profit was also higher than expected. So, as you can see in the table below, almost all of the financial data exceeded expectations. Most of the year-over-year, YOY, growth rates start at 50%, and some even reach 80 or 90%. So, the data itself actually looks pretty good. In addition, the company has a new large stock buyback authorization, and currently there is still $14.7 billion remaining in the buyback quota. Also, in the last quarter, the company repurchased shares and paid out dividends totaling about $10 billion. As for the earnings call, NVIDIA remains optimistic about its host business, as their statements have all been quite positive. They mentioned that the current Blackwell architecture is developing at full speed, and the Blackwell architecture saw a 17% quarter-over-quarter increase last quarter. Now, they mentioned that Blackwell is an AI platform that everyone has been anticipating for a long time. The market is huge, and the competition has already begun, with Blackwell positioned at the center of it all. So what they're saying is that this wave, this momentum, and the demand are still very much present here. It is expected that by 2030, their AI technology will reach a scale of 3 to 4 trillion US dollars. So right now, everyone feels relatively reassured, believing that within the next 5 years, AI demand won't peak yet, and the market will only continue to grow. Overall, the Blackwell architecture is being adapted to meet the needs of major cloud service providers, as well as enterprises and governments. Currently, in terms of manufacturing centers, it's possible to reach an annual level of 600 billion within 5 years. So overall, both the spending and outlook remain quite positive. Also, just this week, they started rolling out the scale-across solution, which they say is a major breakthrough. This solution can integrate directly with Huida's own software. It integrates various aspects and can significantly improve the efficiency and throughput of AI and even data center factories. As for its Q3, meaning the third quarter of fiscal year 2026, if you exclude China, the revenue range is between $52.92 billion and $55.08 billion, with the midpoint at $54 billion, which is higher than market expectations. However, the highest estimate was $60 billion. Now, this is actually a bit open to discussion, because their official forecast doesn't include China, but the highest estimate does include China. So, if you take the China segment into account, there's actually a chance for it to surpass $60 billion. Now, as we'll see in a moment, many brokerage firms have also raised NVIDIA's target price within the past few hours, and that's mainly due to this, as well as the potential in the Chinese market. For the third quarter of fiscal year 2026, they believe the gross margin will rise by 3.3%, and for the whole year, the gross margin will be around 75%. In addition, for this quarter, the third quarter of fiscal year 2026, it is expected that $2 to $5 billion worth of H20 could be sold in China. But whether this amount can actually be achieved still depends on the real situation. It's also possible that the actual sales won't reach this figure, because at present, only a small number of people have the license to purchase the H20. Another major topic right now, or rather a trend going into next year, is whether ASICs will have the opportunity to clearly start replacing NVIDIA GPUs. The companies currently benefiting from this, such as Broadcom and Marvell, are representative examples. NVIDIA, on the other hand, claims that its products have already surpassed ASICs, so it believes that NVIDIA's added value or its advantage lies in its comprehensive solutions. They mentioned that this solution includes chips, software, networking solutions, and system design, all of which are very complex. NVIDIA believes that this requires an incredible level of engineering expertise. As for the company itself, NVIDIA provides architectures for on-premises, edge, and robotics applications. They still use the term on-prem for local deployment. Their efficiency is the best in the industry, and the complexity is much higher and faster than other solutions. So they don't believe that other parties can compete with NVIDIA. So right now, they're really positioning themselves as a comprehensive enabler of AI infrastructure and a provider of solutions. It's not just about selling chips, they're selling all kinds of products. Not only does this allow them to diversify their revenue streams, but it also lets them build deeper connections with customers in various ways. Additionally, the company mentioned that the latest Blackwell architecture offers energy efficiency that is 50 times greater than HOPR. And if you invest in Blackwell, the token revenue it generates is 10 times higher. So basically, if you spend $3 million to buy the Blackwell architecture, you could generate $30 million in output. That's the idea. They keep emphasizing that Hueda offers a great price-to-performance ratio. Even though Hueda's products might be expensive, because of their high cost-effectiveness, your profit margins can improve. In the end, this benefits your company's financial performance. Additionally, they mentioned that the Chinese market is huge, and they will do their best to negotiate with the US to see if Blackwell can be sold in China. Actually, this is a major variable going forward, because right now, if a version of Blackwell that's about 70 to 80% of the original performance can be sold in China, China would probably be willing to accept it. As for the H20, China currently doesn't want it because it's too outdated, and it feels like a handout from the US. But if China really does have a demand for advanced chips, and if Blackwell can actually be sold in China, that would be a huge positive for Hueda. Also, regarding the 15% tax that the US government wants to impose, it's actually not finalized yet, because the US government hasn't made an official, written decision. Right now, it's more like a verbal or unwritten agreement, so at this point, there are still some uncertainties about this 15% tax. In addition, it mentioned that this year's sovereign AI revenue is about $20 billion, which is double compared to last year. As for the main points here, the EU plans to invest 20 billion euros to build 20 AI factories in France, Germany, Italy, and Spain, including 5 super AI factories, aiming to increase its infrastructure capacity tenfold. So you can see that every country, not just the US and Europe, but also Asia, Latin America, Southeast Asia, and so on, are all working on deploying sovereign AI. And actually, with these deployments, there should be a clear increase in scale and improvements in architecture going forward. This is also a catalyst for Hueda's stock price to continue rising. So at this point, how should we look at Hueda's prospects going forward? That is to say, at this point, the market has more or less already priced in the shipments of its Blackwell architecture, and there are also some expectations for its next-generation products. Looking ahead, for its stock price to have a chance to rise significantly, it will depend on whether its sales in China show a clear improvement. This would actually be a major source of increased revenue and future growth for the company. If the next generation product can really be launched on schedule, it will also serve as a strong boost for the market. Because right now, we know that its Blackwell product has been launched smoothly, but before the launch, it actually took a long time. During that period, people were wondering if Nvidia was having issues and whether there would be constant delays. In the end, though, things turned out relatively smoothly, and shipments have been quite robust. So if the next generation product can be launched on schedule, it will be a good thing for the company's operations, and its future roadmap and planning won't be hindered either. Another area of its latest developments is in robotics and sovereign AI. In the future, there should be a clear increase, but the timing depends on whether that will happen 2 or 3 quarters from now, or how the timeline will play out. That will be determined by future developments. So right now, for Hueda to keep growing, aside from the factors mentioned above, it also needs large tech companies to place orders. Only then will it be able to perform well. So, it's also important to pay attention to the current state of capital investment in AI infrastructure. Simply put, Nvidia is indeed being affected by the trade war right now. As an American company, you can see that the US is currently engaging in trade wars with various countries, and this trade war has already started to have a real impact on different businesses. You can also see today that, for example, chip stocks in Asian and European markets, Asian chip stocks have gone up, and European stocks have also risen. This means that, at the moment, Asian markets might think that since Nvidia and similar companies are being restricted by the US government, it gives some room for local Asian and European chip companies to operate. As for Europe, they're simply benefiting from the US actions, either because capital is flowing out, or as a way to diversify risk. So what we can see now is that the current US trade war has already started to have some impact on the companies themselves. For Nvidia and similar companies, it seems that the trade war is affecting their sales, and this impact on sales has already started to show up in their financials. This, in turn, will also affect their stock prices. So you can see that right now, Nvidia's stock price initially dropped in after-hours trading. Although the decline has narrowed, it still seems to be in an overall downward trend. This feels more like an American event rather than a global one, because in the past, if there hadn't been this trade war, Nvidia's performance wouldn't have affected the global stock market. Now, we're starting to see some divergence in the stock market, and it's expected that this divergence will become more and more pronounced in the future. If the US does something, or maybe does something strange, the ones who might suffer the most could be the US stock market or American companies. As for other countries, the impact on them will be relatively minor. The market remains optimistic about Nvidia. This year, especially this afternoon, many major institutions have raised their target prices for Nvidia. At 7 o'clock today, Benchmark also raised its target price to over 200. So right now, it seems like everyone is repeatedly analyzing Nvidia's earnings report. Overall, both its current performance and its future outlook have given everyone a sense of relief. The only slight shortcoming is that it wasn't exactly stunning, and there are still some uncertainties regarding China. Alright, so looking at Nvidia's earnings and stock price right now, it's basically fluctuating in this range. Later on, it's possible that today it might open lower and then move higher, but going forward, its price will fluctuate along with the market's performance. At the moment, overall, it's not far from moving upward again, so we can still keep watching it for a bit longer. Alright. Next, let's take a look at global developments. So regarding global developments, there was news today that back in March, China's leader Xi Jinping sent a letter to India's president, which is a symbolic position, asking if there was a chance to improve bilateral relations. But at first, India ignored him. Then in June, India realized that negotiations with the US weren't going very smoothly, so they started to seriously consider the possibility of improving relations with China. In July, negotiations between the US and India went even worse, and there was more contact between India and China. The foreign ministers of both countries met for the first time in 5 years. And in August, which is this month, both sides committed to improving border issues, and there might even be a redrawing of the border. Because right now, the border area is actually the most direct point of dispute between China and India, and there have even been several bloody clashes there. If they can settle these border issues, one of the biggest sticking points between the two countries will be resolved first. Some American analysts have even sarcastically said that Trump is the biggest driving force behind the reconciliation between China and India. What he did was actually very simple. He took India, a country that the US might have previously seen as an ally, since it's also a large democracy, and the US tends to think, we're a democracy, India's a democracy, so the two countries are relatively friendly. But what Trump did was simple. He turned India into a rival, which pushed India to improve its relations with China. So you can see that the current global situation is developing just as previously imagined. For example, if the US starts a trade war and pushes other countries to look for new friends or partners, or to shift their economic and trade cooperation from the US to other countries. Actually, China and India, these two countries, have areas where they can complement each other. Right now, China actually has a lot of industries with surplus production and nowhere to sell it. As for India, it wants to boost its manufacturing sector and needs some investment. So in this regard, China and India can actually complement each other. However, there are still quite a few challenges between these two countries, such as their positions on Tibet, Taiwan, and Pakistan, among others. Also, India is still a member of the US-led Quad Alliance, which is a security alliance. So the relationship between the two sides probably won't see any dramatic breakthroughs or immediate improvements. Instead, it will likely be a slow, gradual process of making adjustments and corrections. At the very least, it should be better than the previous tense, confrontational state. On another note, the United States continues to put pressure on India. US Trade Advisor Naval mentioned that the Russia-Ukraine war is essentially Modi's war. Why did he say that? Because since 2022, while countries around the world have been sanctioning Russian oil, India realized it could buy Russian oil at a discount, which helped stabilize domestic inflation and energy prices. So India started buying large amounts of Russian oil, and Naval insisted that the road to peace must pass through New Delhi. That's why the Russia-Ukraine conflict can also be called Modi's war. He also said that if India stops buying Russian oil, it could immediately receive a 25% tariff reduction as soon as tomorrow. So we can see that, at present, the United States is actually looking for a way to back down from its position. The US is telling India, hey, you can stop buying Russian oil, and I'll immediately waive your tariffs. Besides this news, it's also been reported that Trump has called Modi many times, hoping Modi would discuss things with him, or at least respond. but Modi has mostly ignored or avoided responding to Trump's requests. So, what we can see right now is that Modi is basically refusing these kinds of invitations. So, Modi is taking a pretty tough stance here. As we mentioned yesterday, because of India's economic size and its industrial structure, it actually has a chance to be self-sufficient. We'll have to see how things develop going forward, since a 50% tariff is actually quite high. Next up, Mexico is planning to raise tariffs on China. They are adjusting tariffs to avoid the impact of low-priced imports, mainly targeting promotional sales of cars and textiles. As mentioned, geopolitics still plays a very important role, and for Mexico, located in North America, that's the United States, Mexico, and Canada. Previously, Mexico proposed the concept of a North American fortress, suggesting that the three North American countries should strengthen their internal connections together, and possibly completely do so. And keep the undesirable things outside, including imports from China and so on. So, because of Mexico's own position and its division of labor with the United States, it chooses to align itself more closely with the US. On the other hand, as for Thailand, he said that the US might set the manufacturing standards for this region. It has already reached 50%, meaning that for products manufactured in Thailand or Southeast Asia, the local content must exceed 50% to be considered made in Thailand. This is to prevent third-country transshipment. As for the follow-up, actually, this news just came out this afternoon, and it was released by the Thai side. We haven't seen any other sources yet. For more explanation, you can look back at the developments here. Next, Japan's representative to Taiwan, Akizawa Ryo, from the Ant Group, has temporarily cancelled his visit to the United States. They also said there are still issues to discuss. This situation is actually rather odd, because originally, it was actually Commerce Minister Liu Ding who mentioned that the Ministry of Commerce would announce the Japan trade agreement this week. We're now at Monday, and this was already brought up before. At present, Japan still wants the US to lift the restrictions on optical repair, but there hasn't been any progress on that front. What they want is for the US to lower the tariff on auto parts from 25% to 15%, and also, in other words, they don't want the tariff to drop just to 15%. But this matter hasn't been finalized yet, and Japan is still pushing for it. However, seeing that the MI representative is still visiting the US suggests that there are still many unresolved issues, so this negotiation is probably going to take quite a while. Next, there's the news that just came in about Russia attacking Kyiv, and the scope of the attack also includes the office buildings of the UK and EU delegations in Kyiv. The thing is, you can actually tell where the attacks are targeting. This attack seems to have a bit of a strategic element, and it also shows that, for now, the situation is far from over. The supply to Ukraine is still ongoing. As we mentioned before, this topic could potentially turn into a black swan event, especially if it overlaps with other developments. And this could have some unexpected effects on the global economy or the world order. Alright, next, let's talk about some developments in the US government. This is related to the article we mentioned yesterday, and how things are evolving rapidly. But I think today we have to talk about the CDC director in the United States. Just 1 month after taking office, he was already under media scrutiny. However, he has refused to resign and has stated to his lawyer that he is someone who defends science and cares about the public, so he will not resign. People have analyzed and pointed out that if he is dismissed, the reason would be that he does not support the vaccine policy advocated by the Secretary of Health, Xavier Becerra. So what is this vaccine policy? Basically, his view is to return to the pre-vaccine era and let the strong survive. This is Xavier Becerra's perspective. Given this viewpoint, Xavier Becerra might think that pregnant women or healthy children don't need to get vaccinated because maybe the strong will naturally survive, and if those who are not healthy will naturally be eliminated. That's basically the logic. In fact, in June, he fired all the members of the CDC's expert advisory group, which means he chose to select members who support his policies. Of course, this policy has a very negative impact on public health. And also, these officials pointed out that these recommendations, since they're issued by the CDC, which is at the federal government level, people might accept them before there are alternative standards. And after accepting them, it could put pregnant women who follow these recommendations at risk. Now, actually, we're starting to see states developing their own health guidelines. People are turning to consult at the state level, so you can see that if the federal government becomes ineffective and institutions lose public trust, then everyone might start to fend for themselves and look out for their own interests. In healthcare, which is an area with relatively rigid demand and serves the broader public, this kind of situation will likely lead to states taking the lead. We'll have to see how things develop going forward, because if the CDC continues down this path, it will have a significant impact on public health and healthcare in the United States. As for now, actually, the current state of the pandemic in the US, the number of cases is also starting to rise, and there are also some new diseases on the rise. In this situation, it's impossible to handle things as they are, so there will likely be some significant impacts going forward. Right now, in addition to the CDC director being dismissed, 3 other people have also left their positions: the directors of the Immunization and Respiratory Diseases Center, the Surgeon General, and the director of the Zoonotic Infectious Diseases Center. So these 3 people are also relatively important. These people are all relatively high-ranking within the CDC. In fact, this whole group has been dismissed. As for what happens next, we'll have to see how things develop. Next, previously, Trump in the US took action against the residence of the National Security Advisor, because after he left, he started criticizing Trump's foreign policy, which led to his downfall. Now, in the greater Washington area, people from all walks of life are uneasy about Trump using national power to go after his opponents. Recently, this has become a hot topic. Trump has accused the Capitol's son of using the Open Society foundations to support violent protests in various places, which may violate the Racketeer Influenced and Corrupt Organizations Act. That's the law known in English as RICO. People are saying that right now, Trump is selectively using the power of federal law to punish his opponents, and this situation could escalate further, intensifying the current climate. This could, in turn, increase opposition voices and also impact the safety of various public figures. Next, let's talk about some market trends. Right now, you can see that Trump's family is still raising money through the crypto space, which we also mentioned in our article yesterday. Today, people are talking about the Bitcoin mining company American Bitcoin, and through this, after going public, it's actually merging with this company, and it will change its stock ticker to ABTC. So this allows people to buy this stock. As for the fundamentals of this stock and how it actually performs, that's still up for debate. Besides planning to go public in the US stock market through a reverse merger, this company is also considering purchasing assets from the US. For those who can't buy US stocks, there are still ways to invest, such as, for example, investing in other countries' stock markets and, in the process, buying shares of American Bitcoin. But let's ask the question, if we want to buy this kind of publicly listed Bitcoin asset by purchasing GYP stock, then why not just buy Bitcoin directly? So this whole thing is kind of odd. Why not just buy a Bitcoin-related ETF instead? This is something everyone can think about. On another note, there's also some news about Trump's media company. Yeah, Exit and so on. And then there's also Crypto.com, which set up a company to hold coins, specifically CROB. This company will also go public through a SPAC, with the ticker symbol MCGA, though it hasn't been listed yet. So that's another piece of news. Basically, right now, Trump and his team are using various methods to raise funds. There's also news that Trump discovered this cryptocurrency called For Liberty, abbreviated as WLFI. Originally, this token couldn't be traded, you could issue it, and after you bought it, it would just sit there. But now, the holders of this token can vote, and they voted on whether to change it from non-tradable to tradable. This vote passed with 99% approval. So if this token becomes tradable, it means its value could increase. And if it does increase, since most of the currency is controlled by Trump and his family, the value for Trump himself would also rise accordingly. But that's the current situation. Now, we can see the stock code for GYP. And in pre-market trading, it has shown a noticeable increase. Let's take a look. This stock price really shows the typical characteristics of a speculative stock right now. Next, we can see that in the US market, some research institutions have calculated that, as of August 20th, the total amount of stock buybacks by US public companies has reached $1 trillion. Right now, the hot topic everyone is discussing is that we've already seen the financial reports released, and next week we'll be entering September. September also has market holidays, and actually, for most of September, liquidity, seasonality, and some other factors will be influencing the market. so the volatility will be relatively high, which means the chances of a market drop could be greater. But at the same time, there are also some forces waiting to step in and support the market. Right now, people are talking about how both institutions and retail investors might not have extra funds to buy the dip this time. If there isn't a strong enough force to buy on the dip, then the stock market's decline could be quite significant. But right now, aside from the first group of buyers, companies themselves are actually a strong force as well. So at the moment, companies themselves have become the main buyers supporting their own stocks. Right now, there are actually a lot of these. Research institutions have discussed that the scale of buybacks could increase from the current $1 trillion to possibly $1.23 trillion by the end of the year. So at the moment, there is still some capital or some forces supporting the US stock market. Besides retail investors, another force that can't be ignored is the companies themselves. Looking at the current announced buyback amounts, Apple is the largest, followed by Alphabet in second place, and then Meta in third. As for those jokes, we continue to observe market trends. There are warnings that pension fund investments are becoming relatively politicized. Pension fund investments may be influenced by management following the will of either the Democratic or Republican parties. In the end, of course, it's the beneficiaries who are affected, whether positively or negatively. This is why such a warning has been raised. The biggest difference between the Democratic and Republican parties is that the Democrats may want pension fund investors to pay more attention to ESG factors, while the Republicans are likely to focus more on financial returns. At present, there has been a lot of debate over this issue. Also, let's talk about Cathie Wood. She recently visited Taiwan and gave an interview, where she mentioned that autonomous driving, healthcare, and cryptocurrency are her three main investment directions. Currently, her flagship fund, ARK, invests along 5 main themes: robotics, energy storage, AI, blockchain, and gene sequencing. In fact, a few years ago, people used to mock ARKK, saying it missed out on the bull market. But actually, this year we can see that ARKK's inflows have increased significantly, and its performance has clearly outpaced the S&P Wink with tongue sticking out 500. Looking ahead, with the expected start of an interest rate cut cycle, it's anticipated that by betting on some relatively smaller companies, there is a chance for gains this year. Looking at the scenario for next year, there's a good chance it will outperform the index by a wide margin for the whole year. In fact, you can check ARKK's latest holdings on its website every day, so I suggest everyone take a look. You can see that currently the stocks are updated daily, so you can also use them as a reference for your own trading decisions. In a moment, we'll look at the recent capital flows for ARKK. As mentioned, there has been a significant inflow of funds since the beginning of this year. Next, let's talk about Meta. They have plans for a treatment center in Louisiana. Originally, they said the scale would be $10 billion, but Trump blurted out during a cabinet meeting that the actual amount is $50 billion. Everyone was shocked to find out the amount might actually be 5 times higher. When people went back to look at Meta's balance sheet, they realized the company itself could directly handle this amount, but people are curious whether this investment is really worth it. Is the next round going to be even higher? So, moving forward, we'll keep an eye on how this situation develops. Looking at the inflow amounts for ARKK, you can see that there haven't been any significant changes in recent years. But in 2025, there has been a large shift like this. So you could say that right now, ARKK is gradually attracting more attention from investors. Everyone can keep an eye on its future performance as a reference. Also, looking at Meta's performance has been relatively weaker. Right now, it's below the 20-day moving average. Next, we see that Gaussian is optimistic about the iPhone X launch event. He believes that the iPhone 11, because of its product updates, is quite different, and with the higher price and many different models coming out, it can drive a big wave of people upgrading their phones. The sentiment here regarding tax payments is relatively optimistic. At the moment, there actually isn't much expectation from the public about Apple's new product launch or its related events, so going forward, Apple might have a relatively decent performance in the second half of this year, because with expectations being low, if there are some aspects that turn out better or slightly exceed expectations, that would become a clear positive catalyst. Goldman Sachs also believes that the iPhone 17 could drive Apple's sales growth for these 2 fiscal years up to fiscal year 2026. On another note, Tesla registered 8,837 vehicles in Europe in July. However, even with a strong annual inspection, BYD's registrations reached 13,503 units, and the year-over-year growth is over 200%. So, That's a pretty significant difference. The contrast is quite obvious. He said that currently, Chinese car manufacturers are indeed experiencing relatively stable growth in various regions, so aside from some trade disputes or other issues. Policy sanctions. If these issues didn't exist, and you were just considering business and cost effectiveness, then Chinese cars currently have a relative advantage globally, especially here. Next, let's take a look at Apple's stock price. At the moment, you can see that Apple's recent trend has been relatively volatile, so we'll have to see if there's any clear upward movement next week. Based on its characteristics, it still looks like it will continue to fluctuate. Alright, now let's take a look at the pre-market strong and weak sectors. Before we get into that, let's first check out the current economic data. Right now, the GDP has been released. The second reading is 3.3, which is in line with expectations. The other figures are also pretty much as expected, so the economy is still relatively strong at the moment. In fact, the economy is currently showing relatively high growth. Currently, the initial jobless claims are at 229,000, which is lower than the expected 230,000, so that's pretty good. Previously, it was revised down to 234,000. As for the continuing claims, they are at 1.954 million, which is also below expectations. So, looking at this week, both the trend and the continuing claims for unemployment are lower than expected. This suggests that the labor market is still relatively healthy. Let's take a look at the current situation. Has there been any change in the futures market? There's been a noticeable upward movement. So, what we're seeing is, which part is showing the most significant change? So, overall? To answer, right now it's showing a slight increase. As we mentioned earlier, GOI has seen a significant jump, but later on, it shifts to ABTC. As for the rise, these companies actually had pretty good earnings reports, but PST and Snow hadn't really gone up before. Now, when the earnings were released, suddenly everyone jumped in. The doubts about them have been somewhat alleviated, which is why there's been a noticeable surge. This is more of a catch-up rally for lagging stocks. Let's take a look at the S and AMP Winkwatong sticking outside. Dollar General is still not sure yet, but we'll see what the expectations are. Right now, it's up about 5% in pre-market trading. Actually, there are quite a few like Brown, Format, and Dollar Tree. As for CrossStrike, there are more declines. Currently, Nvidia is down, while Intel is up a bit, and Tesla is down slightly. Overall, for the market. As for the stock market going forward, like I just mentioned, it should fluctuate with events and economic data. The main focus will be on how the economic data performs, especially next week's non-farm payrolls and the CPI the week after. We'll keep tracking these for everyone. That's all for tonight's group update. Thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.